What's up, radical traders? Today we'll be discussing the bear gold. There are a couple of entries to note on this trade for the week, which I'll cover further in the next few minutes. So I've thrown a couple of support and resistance levels, which is an indicator that I love to use due to its simplicity and success. On Monday, I usually don't like to take trades as the market is just beginning to show which direction it will be moving. However, if you are a full-time trader, this would be your first entry over here, marked up on the screen with a yellow circle. And what we see is that this level was rejected. We see there's a resistance level over here, and the market literally just came down to this level, formed a bullish engulfing pattern for about 800 to 1,500 pips. The reason I say this range is because the first take profit would have potentially been at this mini key level that we have over here, as we saw this consolidating a little bit, so you might have taken profit there. Otherwise, you'd ride it out all the way to our key level, which we marked up earlier. On Tuesday, we see a new level of resistance forming. We identify this by the fact that the candle wicks are rejecting this key level on 1910. We know that the market will either break out of this level to go long or reject this level, which is more favored as mentioned due to the the wicks, and giving us a sign to go short. As we see, we had multiple instances of the wicks rejecting this level, which eventually at 10 o'clock had fully fell down from that level, so it rejected it. Wednesday, we see a new sub level, which was not very easy to notice over here with this blue bar unless you are a full-time trader. And the Japanese candlestick pattern seen here is not a fully developed one in the sense that it doesn't show much of signs to go long. However, because of the wick and the pullback and the history of this level being rejected, as we see it's respected on multiple occasions, this would have been another entry to be taken on Wednesday. I plan to make a video explaining additional forex terms soon, so be sure to subscribe for that. I do also have a short couple of videos explaining some forex educational things, which you will see marked at the top of this video. Be sure to check that out if you'd like to know more about these forex terms. Moving along to the Wednesday night, which is preparation for the Thursday trade. For those of you who work day jobs, we would have placed a buy stop at 1911. The reason for this is the candle body has never closed above the level on the 1 hour time frame, and this trade resulted in a 4,800 pip gain. Due to the previous high on the chart, you would see that this was the most respected resistance level, and it's respected again at the same point. This is exactly how you gauge when you will take profit. Look for the next key level and you set your target at that point. The reason for this long move over here, as some of you might know, was due to the war between Russia and Ukraine, but still the market followed the usual way. It still went all the way to the previous support and resistance level. This shows exactly why it's important to manage stop losses and take profits proactively, and why I placed the note on the screen with the yellow text which says that you will always miss many trades, but just stick to the principle of one trade per day. Set the target of pips that you want to catch every day. Thanks for watching, everyone. I hope you got good value out of this example. Be sure to backtest it for yourself. Don't just take people's word for everything, but test it out and confirm the success and be amazed.